Hi, everyone. We're just getting settled in. Jamie, Dante, I assume you guys can hear me okay?
Yep.
Yes, all good.
Yeah.
All good.
Okay, great. So we're just getting our webinar participants lined up. We've got about 100 people so far. We've got almost halfway there. So we're going to give people another minute or two to get started or to get signed in. So yeah, we'll kill time for another minute or so before we get started on this webinar. Okay, our numbers are increasing quite nicely, so I'll get started in just a second. So I guess I'll start off by killing time and telling you a little bit about who I am. My name is Effie Habsha. I'm a prosthodontist. I work in Midtown Toronto. I'm also the founder of Women in Dentistry, which is a group that we started 10 years ago. And this is part of our webinar series. So it's 2 minutes past 1. So I think we'll get started with today's program to keep things on time. So I'm assuming everyone can hear me. I'm the host for today. We've got two excellent guests with us today, but we at Women in Dentistry, as I said, we've been an organization, Women in Dentistry Work-Life Balance. We started this organization 10 years ago, and we offer CE throughout the year. And we thought that during this COVID crisis, that we would offer some more education to you guys, and specifically, the first few sessions we thought of doing would be to include something about, how we're dealing with the COVID crisis, how we're dealing from an emotional standpoint. So we have a great webinar to be given by Dr. Sally Safa next week on managing your anxiety during this COVID crisis, during the pandemic. We've got Dr. Sonia Chopra, who's going to be giving us a presentation on managing endodontic emergencies in a couple of weeks. But to kick off the webinar series, we thought we would start with a topic that's very relevant to a lot of us, to all of us, in fact, and that has to do with our finances. And so we're all, in this together, and there's a lot of anxiety, a lot of fear around our financial situations. We as dentists are not practicing. We've shut down our practices for the most part, and there could be quite a bit of a tremendous amount of financial strain on top of everything else that's going on. So with that in mind, understanding that the market volatility is what it is, and people are really scared and anxious about their finances, we thought we would try to relieve some of that anxiety by providing you with answers to your questions. And so to kick off our series, we thought we would start off with having two experts in the field, Jamie Keenan and Dante Rossi, to help answer our questions and to navigate us through these tumultuous times and help us weather the storm. So I'll start off by introducing Jamie. Jamie is a wealth advisor and associate portfolio manager at BMO Nesbitt Burns. She has a background in economics and marketing, and Jamie's known for providing a fresh approach to client services and financial management. Jamie has built a strong reputation within the capital markets industry, so much so that her extensive work within wealth management in Canada led her to a spot in the IIAC Top 40 Under 40 nominees for 2016. We also have with us Mr. Dante Rossi. Dante is the Director of Tax Planning at BMO Nesbitt Burns, and he and his team provide specialized tax and estate planning solutions as part of an integrated wealth planning strategy at BMO Nesbitt Burns. So Dante is here with us today, and he'll answer our questions about the Canadian government stimulus package and how these relief measures may apply to your business. So welcome, Jamie and Dante.
Thank you.
Thank you.
Yeah. So just a bit of housekeeping. So as I said, you guys are the first of this webinar series. So all of the audience, when I say you guys, I'm referring to all 100 plus of us in today's webinar. And what we thought we would do is we are doing this webinar as an interview, essentially. So we've compiled a number of questions that viewers had sent in advance. And we're just going to pose those questions to Jamie and Dante and hopefully answer all of your questions as we proceed. Just for your information, we've muted the microphones. So you will see there's a chat box in the bottom of your screen. You can feel free to send questions to me, to send it to everyone, I guess. And we'll get the questions, or you can send it privately to me, and we'll try to answer them as we go along. So that's just a little bit of housekeeping. All right, so let's get started. So the first few questions I'm going to pose to Jamie. Jamie, I know you're a busy woman. I know your phone must be ringing off the hook over the last couple of weeks. I'd like to know from you, what are the most frequent questions that you're getting from your clients? What are people most concerned about?
Yeah, no, it's a great opening question. And thank you for having me today, just to start off. It's a pleasure to be here. And hopefully we'll be able to answer a lot of your questions. And if not, we can take some offline. But yeah, I would say the last 2 weeks, I've been, nonstop conversation with clients. I think one of the biggest questions that I'm getting right now is, when will this stop? When will this come to an end? When I say this, I mean the volatility. The markets have been acting completely irrational and completely volatile over the course of the last few weeks. And clients want to see a light at the end of the tunnel. So they want to understand what components we're looking for in the market to help smooth out some of this volatility in the future. So the first item that we saw that was a really positive sign happened last week, and that was the U.S. government releasing the details around the $2 trillion stimulus package. And in general, just some coordination between the government and the central banks around the world to essentially say, we're going to do everything possible to be able to hold up businesses, to be able to hold up the market. The other element that we saw was the Federal Reserve, and we saw this in Canada as well, with the Bank of Canada reducing interest rates to record lows. So that was another component that we were really looking for to help see the light at the end of the tunnel. And the last element that we want to see, and which we don't anticipate to see for another few weeks, is the peak of the virus itself. This is a global pandemic. This has been a shock to the markets. So it's not like 2008. It's more like 9/11 on steroids. It's been a shock, and until we start to see less bad news and therefore the peak in the virus, I think that will ultimately be what leads the market to start acting a little bit more rational than it has in the last few weeks.
That makes a lot of sense. And that I think a lot of people are really concerned about what to do with their money, because there's a lot of uncertainty. You just excuse me for 1 second. I think we're having a minor technical glitch here, but I'll keep you up to speed on allowing more registrants to come in, because I think our system maxed out at 100 for some reason. Anyway, we'll carry on for those of you who are logged in. So I think with so much uncertainty in the market right now, what would you say your number one piece of advice is to people who are unsure of what to do with their money?
Right. So I would say, don't let the short-term noise affect your long-term financial planning goals. So when we hear major headlines, for instance, I woke up, and we all wake up to our cell phones and have those messages come in as soon as you wake up in the morning, and there's headlines like, worst crash since 2008, or really fearful headlines that are coming through the media right now. And fear is a really powerful emotion, okay? Fear is a way more powerful emotion than greed. So when I talk about a fear, and when I'm talking to clients about fear, is that we have to make sure that we're managing our emotions right now. When we act on fear, we're acting on impulse. So we end up doing things to our portfolio. If we're acting out of fear, we do things that can totally derail our long-term goals. So I would say my number one piece of advice right now is that, this market, if you're an investor right now, you're on a roller coaster, and you just need to make sure that you're buckled in, and this roller coaster will come to an end. This too shall pass, but it's better to ride the roller coaster through to the end, because remember, it's about time in the markets, not trying to time the markets. We will never be able to perfectly time the markets, and if we get out now and panic and hit the sell button, then we could end up missing out on some really good up days, and we saw a lot of those last week, since we have the best week in the market since the 1930s, right? So you want to make sure you don't make irrational decisions. at the time where fear is driving those decisions. That's what I'd say, I guess, to that.
So is now the time to invest, would you say, or is
Yeah, again, I've been getting that question a lot too. I think that, you know, you need to take a step back, number one, and say, ask yourself a few questions. Number one, do you have an emergency fund already? So by emergency fund, I mean, do you have 3 to 6 months of expenses set aside in a really safe account that's not going to fluctuate with the markets? And if the answer to that question is yes, then I would say, okay, let's talk about this as an opportunity to invest some of our, if we have cash on hand. So the second question I would ask is, you know, are you investing this money to make a quick buck, and your time horizon is short? And I would say, okay, yes, there's still opportunities in the market, but you have to be prepared to lose a lot of money right now, because the volatility is not over. And if you're thinking of making a quick buck, then you have to be careful, and you have to be mindful that you could lose a lot of money. So then, if you're not looking to make a quick buck, and you're looking more as a long-term investor that I would say has a time horizon of more than 3 to 5 years, I would say yes, there's some excellent companies right now that are on sale. It's like walking into the supermarket, and instead of those Lysol wipes being $29.99 at Pusatiri's, they're like, you know, 10 cents right now. That's
that, right? Yeah.
The market, there's a lot of companies on sale right now. And if you're buying into a diversified portfolio and you're dollar cost averaging, then, and you have a long time horizon, yes, there's definitely opportunities. Again, you'll never be able to time this market perfectly. But when you're seeing companies like Microsoft, like AT&T right now that are selling much lower than they were a few weeks ago or a few months ago, then I definitely think that there's opportunities and money to be made.
Okay, so how about Zoom stocks? I'm sure they're skyrocketing.
Yeah. A lot of technology stocks, yeah.
So you guys, I am a little distracted because we have some issues with logging in, but we'll clear those issues with the next webinar. But one second. Okay, so what I'm going to do, just because we're going to improvise, is I'm going to just turn on my phone and go with Instagram Live. So I'll just project my camera onto the screen, and then we'll proceed accordingly. So we'll just improvise a bit. And let me just flip the camera. Okay, so. Okay, so for those of you who, I'm sorry, for some reason we just have a bit of a glitch. We're going to just carry on with our Instagram live feed as well. Okay, so Jamie, again, I think I mentioned at the beginning of the webinar that there's a lot of fear, and you did touch upon that, to not make any rash decisions when you're afraid. What would you say, again, from your experience? I know you've been doing this for a really long time. What's the typical timeline for recovery from a financial crash? You know, how will this impact our long-term goals for investment and retirement? I know my portfolio has gone down, and I'm not even looking at it. So, you know, what advice can you give us?
Yeah. So that's a great question, and by no means do we have a crystal ball. And you know, this has proven, the markets have been proven to be quite irrational over the last few weeks. But the one thing we can do is look back on prior bear markets and prior drops in the market. So I think, like, post the Great Depression in the 20s, there's been, you know, several bear markets, believe it or not, and those by those I mean markets that have dropped more than 20%, and within those time frames, we can look back and again, each of these types of bear markets have been driven for different reasons, right? There was the tech bubble in 2000, there was the financial crisis in 2008, And, you know, we had a hiccup in 2018 in the fourth quarter where we dropped down 20% in a very short time frame and bounced right back up. But out of 23 bear markets in the past, typically it takes about 18 months to break even. And on average, and then some, you know, about 50% of those are about just a year to break even. And then some of those, like more than a third, are more than 2 years. So the big question right now or the big kind of phrase that's being thrown around is, are we going to have a V-shaped recovery, or are we going to have more of a U-shaped recovery? And again, that really goes back. I don't think anyone has the answer, or maybe they do, they think they do, but it really goes back to, you know, when the peak of the virus is going to happen, and then we can have more certainty in our numbers as to how this is really going to affect the economic data that's going to come out in Q2 and into Q3.
I see. Okay. So what, you know, you're part of BMO, you know, BMO Nesbitt Burns. What are the banks doing really to help business owners, to help, you know, families deal with this? And maybe, you know, perhaps Dante will also touch on that in terms of the Canadian government stimulus package.
Yeah, I mean, from a personal perspective, the banks are trying to, and this is not specific to BMO, this is across the board. The banks have been, you know, really, I would say proactive in their efforts. From a personal side, they're talking about mortgage deferrals for a 6-month time frame. That's something that to definitely look into with your bank. You know,
how does that work? Basically, do you just, you know, call up your bank and say, I want to renegotiate my mortgage, or is there any?
Yeah, and it's not even a renegotiation. So right now, I would say the best thing to do is to reach out to, like, I can speak to what to do on the BMO side, and every bank is different, but on the BMO side, you can go to bmo.com, and they have a whole headline that is our COVID-19 measures, financial measures that we've undertaken. There's a link there, and then you can actually go to your BMO banking online and be able to register. And you know, there's been a lot of misconceptions in the paper as to who qualifies for this, who doesn't. My understanding is that, like, a lot of people will qualify as long as you're not, you know, in arrears from your mortgage payments. And essentially what it does is put, like, for 6 months, you're putting your mortgage on hold, but keep in mind, like, it's not like it's going to be a free ride, right? After 6 months, you know, the interest will still be the interest that you would have otherwise paid in that 6 months. It will be amortized into the remainder portion of your mortgage, right? So your mortgage payments after 6 months will go up because you'll, you know, have this interest that you haven't paid for those 6 months. I don't think it's going to be too much to, you know, affect your cash flow significantly, but it's worth a conversation. And if you have a relationship manager at your bank for your business lending, then that's the best person to go to talk about what's happening on the business side of things. But they are doing things like, you know, not charging interest on lines of credit, on your business loans, etc. So I think it's worth a conversation. And if you have a relationship manager, go to them. If not, then go to your online banking, and there should be a 1-800 number for you to call to get more information.
I mean, I heard you can even, you know, negotiate this. It doesn't have to do with the banks, but, you know, even car leases. I know dealerships are doing things for people to defer payments, and, you know, rent we heard of. So there are a lot of things, I guess, that are happening. Okay, so I guess in general terms, and I know we'll get into more details soon with Dante around the stimulus package, but, you know, with your experience as a, you know, top financial expert, clearly the virus is having a negative impact on the economy, and with so much uncertainty, like, you know, what are the basics really for financial planning fundamentals? Like, where do we go from here, basically?
Right. Yeah. So yes, no doubt that the virus is going to have a significant negative effect on economic numbers. So by economic numbers, I'm referring to employment numbers, GDP numbers, manufacturing data, housing data, that these numbers, we saw it out of China because China is just starting to report these numbers on their end. But before I answer your question, I'll give you a little bit of a background. Markets typically move between 4 to 6 months in advance of poor economic data. So what I mean by that is right now the market, the way the market's been behaving, it is essentially building in, or what we call discounting, a severe recession. However, if we start to see less bad news, then that's when the market will start to turn around. This market will turn around and be positive, start moving more positively far in advance of the economic data starting to turn around, okay? So an example of that was in the credit crisis in 2007, 2008. The market itself started turning around in March 2009. So when I say turnaround, it moved from, being, it was the TSN turning point where the market started going in the red each day to turning to positive. Now, March 2009, the economic data didn't start turning positive till several months after that. So the fall of 2009. So the market is a leading indicator that will move in advance of the poor economic data. So we are anticipating economic data in Q2 and maybe into Q3 being really bad. However, in Q2 or Q3, the market itself, if we see a peak in the viruses over the next 4 to 6 weeks, the market itself will already have bounced back pretty significantly from that point. So that's, but to go to your specific question, what are the fundamentals of financial planning that we can really rely on in this time of uncertainty? So number one, I would say, go back to the first comment I made about emergency funds. An emergency fund is always super important. Having that 3 to 6 months of it, expenses set aside and reevaluate that for your own situation. Number two, have you done a financial plan? Are you working with a professional that can help you build out a financial plan to understand where you are now, where you wanted to be in the future, and help you understand how this market has affected those long-term goals and the things that you have to do to maybe make up for that. But working with a trusted advisor can help you build that financial plan. And a financial plan is so important, not just for your financial goals. It's also important to make sure that you're doing everything from a tax perspective with your business, that you're doing when's the last time you updated your will? Some clients I've talked to haven't updated their will in 20 years, and they've had grandchildren since then, and they actually don't know where their will is being held. So it's a good time to really look back at those fundamental basics of financial planning. And then the third thing I would say is take a look at your portfolio, and again, don't make any rash decisions right now in the midst of this volatility, but take a look at your portfolio and understand, do you have a diversified portfolio? And what I mean by that is, do you own stocks that are some consumer staple stocks, some consumer discretionary, maybe some technology, a really diversified portfolio. So for instance, if you were highly concentrated in oil the last month, you would have been, far worse off than the actual market. Right. But if you had a balanced portfolio that had 35%, 40% in fixed income or bonds, and the remainder in a really well-diversified equity portfolio, you're not as off as much as the rest of the market. So take a look at that asset mix and make sure to review it with your financial professional when things quiet down.
And I think we'll have to have you back on to our group to talk about just financial planning in general, but that's really good insight. So I'm going to shift gears a little bit to Dante now and ask you, Dante, specifically. I know you hear about the news and every day, and as a matter of fact, I think is it the finance minister who's giving an update right now as we speak. Every day things are changing. So what can you tell us now about the specific support that the government is providing in terms of income tax relief for dentists? What, in terms of GST, HST, what sort of relief are we getting?
Yeah, no, it's a great question. It's probably the first area we should start at. And as you mentioned, I think right off the top, what I'll say is that, a lot of these measures, there's a big stimulus package that came through. The government's proposing about a $200 billion package in the way of direct income support for individuals, including practitioners such as yourselves. About $85 billion in tax relief by way of deferrals, and also some loans credit available for business owners and practice owners. And as you mentioned, it's an interesting time that we're having this discussion today. I'll say that there have been some programs released, and are some details available at this time, but surely there are some lacking details. And as we speak now, I've got it on beside me. I see my TV on mute there, and I think we're waiting for the federal finance minister to speak today to give us some further clarity on some of these programs. But, I already see some questions coming in through the chat there that I'll try to incorporate in some of my responses here. So, but to get to your first question, some tax relief. Certainly, the way I'll tackle that, I think, is break it down into two different taxpayers, because certainly we're all very broad in how we practice. I'll start off with sort of the sole proprietorship, the sole practice owner, which would include self-employed individuals. And in that category would be sort of your associates, if you will.
Right.
With respect,
we have questions from associates specifically as well.
Yeah, exactly. So I thought I'd just try to, answer that right off the hop. There's some income tax relief in the way of how you're paying your income tax balances. Sole practitioners, associates, and self-employed individuals, we operate on a calendar year basis for tax purposes. So what does that mean? Is that you pay your taxes based on, January 1 to December 31. So we're looking at, for those individuals, your 2019 tax bill. Now, actually, your final tax bill owing would have been due today. Today would be the date that you'd have to pay that final tax amount owing in respect of last year. Now, the government did allow us to defer that tax payment off to September 1st without any sort of interest or penalty. So there's certainly some welcomed relief. It's not, kind of like Jamie mentioned with mortgage interests, it's not that there's a wiping out or reduction of the amount owing, it's deferral. So, but fair enough. I think the rationale behind that is that there's certainly cash flow constraints today that, many dentists and practitioners are facing. So the more you can keep in your pocket to sort of help you tie yourself over the time frame, that's not going to come due until September 1. So with respect to that also is true with respect to installment balances for your 2020 year. There's a June 15th installment deadline coming up as well. And that is also deferred to September 1st, 2020 without any interest penalty. With respect to sole practitioners, associates filing their income tax return, it's always been the case that those individuals, their income tax returns for 2019 are due on June 15th. No relief there. I mean, certainly there's still some ample time, I guess we'll use the word lightly, ample time, depending on how all this plays out, where your return will still be due on June 15th. So there's no changes there. With respect to those of you that practice through a business, meaning a corporation, so many of you probably have a professional corporation set up, there's certainly a lot more deferrals there in the way of the fact that any amounts that are owing on your income tax balances that are due after March 18th and before September 1st. So for example, for those of you that have a corporation with a December 31st year end, today would have also been the day that your 2019 final income tax balance would be due. Some of you may have already paid it, but if you haven't, the good news is that there's relief that you can extend that off to September 1st, as well with any sort of installment balances. With respect to filing your corporate income tax return, again, those professional corporations, those are typically due 6 months after year end. So, the December 31st year end corporations, those would be due in June 30th. No change there, but certainly for those of you that may have a September or October year end, those are due typically 6 months after year end. So for those of you that have maybe a September year end, that would be due today actually, or if you have a October year end, those would be due at the end of April. They've allowed the ability to defer that income tax return filing until June 1st. So again, some welcome relief there. With respect to GST, HST, you also mentioned, whether you're a monthly filer, a quarterly filer, or an annual filer, the good news is that your HST balances owing will also be deferred until June 30th. What we're waiting to hear some more information is that we're not sure how that impacts the tax return, the HST tax return filing. They haven't made any announcements on deferring the filing, but they've made some announcements on deferring the returns, the balances owing themselves. What I'll point out though is one thing that they haven't deferred or allowed your ability to extend is your payroll remittances. So for those of you that still have your employees on staff, make sure that you continue with your normal unchanged, payroll remittance frequency. So that's an important aspect to that.
Which basically leads me to my next question. Essentially, a lot of the viewers here are practice owners, and we're running businesses. And how, again, I've heard in the news that the federal government is providing some wage subsidies to businesses in order to assist them to get through these tumultuous times, to assist with employees. So is this something we can apply for, and how does that program work? Because I think that's a really relevant one.
Yeah, that's a great one actually. And just yesterday, the federal government announced some actually boosting that program. So many of you probably had heard that originally, last week there were some announcements with this 10% wage subsidy, and the effort behind that program is that the government's really looking at ways to make sure that you can keep your employees or maybe even hire back employees that you may have already laid off. And what they're proposing there is to introduce a 75% wage subsidy. That's going to be available to all businesses. So previously there were some restrictions on the types of businesses that would apply. Some of your, dental practitioners may not have applied depending on income levels, the kinds of employees, the number of employees. The good news is that they've gone away with that. There's no restrictions in that regard. So basically I'll say, sorry, what's that?
Sorry. Was there initially a restriction and now that's changed?
And now that's changed. There were some restrictions.
Changing, yeah.
Yeah, constantly changing, exactly. So there, the situation is fluid. And like I mentioned, this is one of the programs where the finance minister is speaking today to give some details. What they've released so far is that who is applicable for this 75% wage subsidy. It's applicable to businesses or practices that can show that they've, had reduced revenues by at least 30%. Because of the COVID-19 impacts.
I would say dentists fall into that category.
Exactly. I think a lot of people fall into that category. What is being provided? Well, it's a 75% wage up to, $58,700 of annual employee salary. So what that means is that that translates into an individual employee salary getting about $850 a week. So for 3 months. So that'll be backdated to March 15th. So for 3 months, you'll get a 75% wage subsidy up to $58,700 of wages.
So we have Melissa asked a question, I think relevant to this. I don't know if you can see that question, Dante. Do they give a time period for when you must show the lost 30%?
Exactly. And funny enough, I've got my own questions and concerns of how these details will work. That is exactly one of the details that has not yet been released. How are they going to determine this 30% drop? Is it year over year looking from 2019? Is it 30% drop looking at your revenue, your billings, your sales from January 1 to March 15th? Not sure how those details are going to pan out. I'm pretty comfortable in saying, as you mentioned, a lot of practices have just completely shut down. So clearly there's at least a 30% drop. I think the government's motivation is that they're not going to be picky on who applies. They're not looking to withhold the benefit. Certainly they're relying on business owners and practitioners to, act in good faith. So, they will check upon how that works, but I don't think that's going to be an issue. One of the other questions that I raised was not only how is the 30% going to apply, but, they're saying that they're going to offer 75% wage subsidy. Well, what does that mean with the other 25%? Is it going to be contingent on you actually paying the other 25%? Or are you
referring to the question that we see that about from Dr. Wagman regarding the if the 75% paid in money back to the practice as a tax credit, do we withhold the tax on the 75%? I don't know if you have that answer right now, but
we don't. So when they originally released the 10% subsidy way back when, which feels like way back when, just last week, they were suggesting that you'll get the subsidy by way of reduced payroll remittances. So instead of paying your CR, you normally pay your employee, you pay them their wage, you withhold that source and you remit to CRA. I think originally as proposed, they were going to eliminate a lot of that withholding remittances. So you're going to keep that cash flow in your hands, and that's effectively your subsidy. How that's going to operate now under the 75% program, again, waiting on details. I think we'll get some of that today. So that is one of the questions I released there as well. Another one that I had in my own mind, like I said, is some of you may have already laid off some employees. Is this contingent on you hiring them back? For instance, I heard Mr. Morneau, the federal minister, speak last Friday. And again, don't have the details, but he had made some comment, and I wrote it here, that applicable to businesses that keep all of their employees at full payroll. So what does that mean for those of you that have already released some employees? Does that mean you're going to have to hire them back? How is that going to operate? And like I said, so if the government's going to front 75% of the wage through some maybe payroll withholding remittance reductions, what about the other 25%? Are you going to be required to pay that 25%? Prime Minister didn't really mention that. He just said, if you can pay it, pay it. But again, the devil's always in the detail to find out what Morneau says. You know, and the other one that I'll bring up is a lot of you, the dentist practitioners, not only do you have employees, but you may also very well be paid as an employee yourself by way of salary. So how is that going to impact you? A lot of dentists that we work with choose not to actually pay themselves a T4 salary, but rather pay themselves by way of a dividend from their professional corporation. And this is a wage subsidy. So how about those professionals that don't pay themselves a wage, but rather are remunerated by way of a dividend? This is silent on that, and I don't think it actually reflects any dividend payments. So it'll be interesting to see how those of you that pay yourself that way will be impacted. But again, and the other thing that I will note is that it's a subsidy, but it's also taxable. So the government will subsidize wages, but that is going to be a taxable benefit to your company. So you'll have to pay tax on that wage subsidy. I think that's not being communicated a lot in the media, but it's an important consideration for sure.
Right. Okay. So we talked about wages, Dante. What about non-wage expenses? Rent, overhead. I mean, as dentists, our overhead is through the roof. Is there any, fiscal support from the government that's in regards to, our businesses?
Yeah, absolutely. And what I'll say is that, that was a big part of the more recent stimulus package by way of loans. What they're doing is the federal government's introducing 3 new sort of programs by way of lending or loan availability. They're mentioning that's going to cost them about $65 billion. And that support's going to come through a collaborated effort between the Business Development Bank of Canada and Export Development Canada, who will be working collaboratively with your private financial institutions such as BMO or any of the big banks. Again, details are lacking a little bit there. I'll share what we know for now. They've said that these programs will roll out in the next 3 weeks following Friday. The first one, there were 3 different programs. The first program that the government's providing is what they call a Canada Emergency Business Account. What this is that eligible businesses, and we'll talk about what eligible means again, may be able to receive an interest-free loan of up to $40,000 that is guaranteed by the federal government. That's going to be in collaboration through the EDC Bank. And you can apply for that loan through your general private bank. So again, like BMO or any of the major banks in Canada. This program is intended particularly to cover operating costs because of COVID-19 issues, right? So like you said, your rent, many of you might have, your practice loans where you bought a practice and you've got a lot of lease or equipment lease costs. So again, a $40,000 interest-free loan. And if you pay that interest-free loan back by December 31, 2020, so almost the 2-year period basically, right?
December
2022, December 31, 2022, you may be able to receive up to 25% of that loan forgiven. So if you, for argument's sake, if you were to get the full $40,000 interest-free loan, as long as you pay it back by December 31st, 2022, 10,000 of that amount will be forgiven. So I said, eligible businesses, we're waiting to get some clarity on what's eligible business. What they've indicated for now is that if you can show that you had a payroll in 2019 of at least $50,000 up to $1 million. So this isn't for your big businesses. If you've got some payroll between $50,000 to $1 million in 2019, you should be able to apply for that. So that's one of the ones where, yeah, speak to your bank. Certainly, as Jamie mentioned, you can always reach out to her. It's coordinated through the banks that are guaranteed by the government. So that's one program. The other program is what they're calling sort of an EDC credit availability. It's loans for small and medium enterprises, which again can include dental practitioners. What they've announced that EDC will guarantee new operating credit or cash flow term loans extended by banks for up to $6.25 million. The EDC will guarantee about 80% of that loan, and it's to be repaid within 1 year. The third program that they're highlighting is a co-lending facility between the business development bank and your financial institution. And what they're doing there is also adding additional liquidity for business owners to receive term loans up to, again, $6.25 million, where 80% will be funded through EDC and the remaining 20% of that line through your traditional bank. What they mentioned there, eligibility criteria, very vague. They've said that as long as your business was financially viable prior to COVID-19, then you should qualify. What is financially viable?
How do you define that?
Exactly, right? So
there's so much gray, right? But
there is, and it's amazing. Every day that passes, more and more details are being released. So what I would suggest is, definitely keep the lines of communication open with your financial professional, with your banking professional, and also your accountant, who is probably keeping on top of the nitty-gritty details. So 3 different lending programs there. I think the biggest one is going to be that simple interest-free $40,000 loan. So again,
promising.
It's going to be quite open, interest-free, and a portion of that will be forgivable. So I think that'll be a lot easier to apply for.
And guys, for all of you viewing, don't worry, we've got this recorded. I hope we didn't, that isn't a glitch. So we will send this recording to you so you can review what both Dante and Jamie had to say. Okay, so I know you touched upon this a little bit before, but maybe because I'm also getting a bunch of questions here, and I think you guys can see them from people who are associates. We got one question from, associates that are now unemployed, like a lot of other dentists. Like, what sort of impacts or what sort of strategies, and maybe both you and Jamie can speak to that. There's one question that stated that one of the dentists and a bunch of his classmates laid off as associates. They want to know what suggestions are of, if you're in a lot of debt, how do you deal with this? What insights can you guys offer?
Yeah, certainly. I mean, if you're in a lot of debt, I suppose it depends on what kind of debt. That may be mortgage debt. I know Jamie touched upon that, right? Sort of, if there's any relief of deferral of payments there, that's an opportunity. I will mention that there's a lot less available for your sort of associate, self-employed individual. The biggest one there is this new Canada Emergency Response Benefit. It's really targeted for self-employed associates who aren't otherwise available to apply through EI. A lot of associates don't pay into EI, so they don't have any sort of EI benefit packages. What they're offering there is sort of a roughly $2,000 a month income support amount for individuals who have seen reduced workload. So not only have you been laid off entirely, but you might actually just have reduced workload. So you may not have been laid off, but that's okay. That's not a deterrent from collecting this income support benefit. We're waiting to see the details, but there's going to be a web online portal through your Canada Revenue Agency account that's going to be open in early April. I'm hearing roughly around April 6th, where you can apply online and you'll be paid within 10 days of your application. So they're waiving a lot of the standard waiting period times. And again, that's going to be from a period of, if you've lost work from March 15th all the way up until October 3rd. So, I was talking to a friend who's a dentist as well, and he's mentioned the same issues. He's saying, a lot of these associates may see a lot more leeway time in them getting busier. For those of you that are practice owners and own your practice, you might open your door when all this closes, and then you get your funnel, you get your clients patients funneling back in, but a lot less maybe in the way of associates. So they're extending that period until October 3rd to allow the availability. Now, you can claim this for up to 4 months. Right now, that's the maximum benefit, but the government has said if needed, they will extend that 4-month period.
Right, right. Well, that sounds promising, I guess, but not promising that they're extending it till October. That means that it's things aren't going to be great for a while to come. So we need to kind of not panic and just brace ourselves and prepare financially. So I guess that's, you know, sound financial advice from you and from Jamie.
Absolutely, yeah.
Yeah, I would just add on to what Dante was saying, just from a personal finance standpoint. I think that this is a good time to take a step back and really look at what our monthly expenses are and what are fixed out of those monthly expenses and what are the variable expenses. I think that, you know, we are all staying in our homes right now, and I notice when I look on my online banking, like there's not really much going on other than buying my the click and collect and maybe some resources for my kids schooling at home now. But my online banking is not seeing a lot of activity right now, and it
Right.
puts things in perspective to understand, like, we do have a significant portion of our lives and our money is spent on these variable expenses, and they can really add up. You know, my coffee at Deneen at King and Bay before I get into First Canadian Place is $3.83 a day. And while that doesn't seem like a lot, but that significantly adds up over time. Or you're all of these, you know, places where it's now $15 to buy our lunch and we're eating at home. So I think it's very simple advice here, but really take an inventory of the things that you're not really missing that much, and that try and continue with a pretty strict spending schedule, because once we get back to living our normal lives, it's important to be able to reflect on the things that actually were necessary and the fixed expenses, and a lot of things that were variable that we could probably keep out of our lives from going forward.
I couldn't agree with you more. I just delete my online emails as they come in for all the retailers. I don't even look at them because it's so easy to shop online. So certainly curtailing your spending habits, I think, really helps, you know, if you're not bringing in any income. So, you know, we're unemployed, a lot of us now.
Mm-hmm.
So I think in the last couple of minutes, again, for the 100 or so that weren't able to get on, we will have this available. So tell your friends, whoever is listening, that we will have the whole session available. It's recorded and we'll send it to everyone. So I think you guys both gave some really good insights to both associates, to practice owners. And I think the key is just to not panic and just basically weather the storm. Seek the advice from your financial planner. And I believe that you guys also have, or BMO has summarized kind of the benefits of the stimulus package, and some, you know, certainly Jamie, you have an online presence with some financial planning tips, etc., that we can direct people to. I think part of our mission with Women in Dentistry as well is to give our audience some more information on, you know, how to recover following this crisis from a financial standpoint. And we will be speaking about practice recovery measures. And Dante, you mentioned, you know, some challenges that associates may face down the road, where, you know, the principal dentist might be more, you know, apt to having the new patients and less is trickled down the pipe. So we will have another webinar, hopefully in the next little while, kind of talking about practice recovery and how to manage that. So Jamie, Dante, any other questions? I'm just going through, or any other, you know, closing remarks you want to leave us with? Are there any questions? Maybe now would be a good time to also, in the last few minutes, have some questions from the floor, from the audience that is listening, that we can incorporate into our closing remarks. And if we don't get any, we can just go through the feed and see what people are asking.
I just received a message. As an associate with no emergency fund, aside from the remaining funds available on my bank line of credit, do you see any risk of the banks making those funds unavailable? should things escalate? Is there a risk to invest some of that money, or alternatively, any reasons to withdraw a lump sum available? I don't see a risk in the bank pulling that. If that's a line of credit that was put in place, that you have access to it. If anything, the interest rate, if it's a secured or unsecured line of credit against I'm not sure how it was set up, but the interest rate on that should be lower based on the fact that the Bank of Canada has done 2 emergency rate cuts. Is there a risk to invest some of that money? Based on your comment that said you have no emergency fund, I would say then no, don't invest that money. It may seem like a perfect opportunity on the markets to get in quick, but I think if it's important for you to have emergency fund money set aside prior to making short-term decisions like that from a market perspective.
Exactly. Okay, we have one other message here.
I'm seeing a couple. I'm just going through the feed here, I guess. One of them, I think I may have addressed it. It was around the wage subsidy. The government's willing to front a 75% amount. If we've closed your practice entirely, how are you possibly going to cover the 25% amount? That was also one of the details, as I mentioned, which we're waiting for on. When I hear the Prime Minister's words yesterday, he indicated that, his words were, if you can pay the shortfall, the 25%, then do it. That doesn't mean that you must pay it. So I'm hopeful that if you can pay it, pay it. If you cannot, then you're not going to be deterred from claiming this wage subsidy. So I think that might be welcome news. And I've got a question here. What happens if you get the wage subsidy and that's a 3-month program, but after 3 months you have to stay closed longer? Can the staff then apply for EI? I think certainly they would be able to. You'll have to obviously lay them off and give them their record of employment and go through the normal EI channel. Another question was, what if you've already laid off staff through EI? Can they get the wage subsidy benefit? Certainly if you hire them back on, then I think that's the goal of the program, is that if you've already laid them off, they will automatically, and if you rehire them, then you'll get this wage subsidy. With respect to the fact that if they've been laid off and have EI, employees, can they apply for this new Canada Emergency Response Benefit, that $2,000 a month? I've been told that if they've already applied for EI, they will automatically be considered for the new Emergency Response Benefit, which is likely higher than the normal EI benefits. So that's a good news story as well.
Okay, excellent. I think we'll end up with, sorry, go ahead, Jamie.
No, I'm still seeing some questions come through, but so you let us know when we should be cutting off.
No, go ahead. We have just a few more minutes left, so we might as well make the most out of the session.
So I'm getting a question. Do you think the market will trend towards a decline until the virus peaks? Seems like there is a lot of volatility, but there is rallying, which is a great question. So the rally last week, we hit a pretty extreme low last Monday. The low was hit last Monday. I'm not sure the date of that. And then we had really strong up days Tuesday, Wednesday, Thursday of last week, and then we cooled off before the weekend on Friday. When everything that I've listened to or talked to from a fundamental and a technical perspective is that we could potentially hit that low again. So we could bounce off that low again that we saw last Monday, and then go forward from there. So as I mentioned before, what we're really starting to see was what we want to see is less bad news. And a good example of that was last week. One of the reasons why the market was up so much was one of the days, a stimulus package had a big deal to do with that, but one of the days, which sounds morbid, but one of the days was that Italy for 2 days in a row had less deaths. So it wasn't as if it was good news, but it was just less bad news that we're starting to see. And the signs that China is becoming, getting out from their doors, starting to open up businesses, that is incredibly good news that gives us a playbook of how long this could potentially last on our end and when that peak of the virus will hit. But we think there'll be several weeks of volatility until the peak happens.
Okay, I think thank you for that information. I think we'll end up with one last question. with regards to if you decide to withdraw money from your RSP, would you still be taxed on it with the income tax changes? I'm assuming yes, but
Yeah, I
Yeah.
can answer that one.
they're not that nice then, huh?
Yeah, they're not that nice. I mean, what they have, so if you're withdrawing from your RSP, certainly you will be taxed in the normal fashion that you will be taxed. I suppose if you don't have any other income, you know, your income level is lower, so that when you withdraw money from your RSP, you'll be at a lower tax bracket. So the withdrawal is maybe less punitive, if you will. You know, what they provided relief on was more for your pensioners, those of you that may still very well be practicing, but are over the age of 71, and you actually have a RIF. What they've done is they've reduced the minimum amount of RIF withdrawal. So you know, when it comes to your RIFs, you're required to withdraw a certain level. I guess it's helpful that they've reduced the minimum because it allows sort of more tax deferral to incorporate to rebound from the market. So maybe that's more applicable for those of you that have elderly parents or whatnot that have.
But I would say, yeah, try the taking money. I mean, email me before you take money out of your RSP.
Absolutely.
There are other ways to deal with that.
Yeah, there's better ways, especially in a low interest rate environment here.
Exactly. I think, you know, TFSA is probably the first one where it's not taxable, but, you know, look into these lending programs. We're getting a lot of questions around the lending. I saw one that I think mentioned banks have yet, a lot of people are saying that their banks have told them to hold off. It's probably likely because these announcements are very new and there's still a lack of detail on them. I know the federal government is working with the big banks. And as I mentioned, a lot of these loan programs aren't being rolled out for another 2-3 weeks. So I think the banks are now getting the details together to figure out, okay, how are we going to, you know, roll out these programs? So a lot of people have probably so far been, I want to say, denied or told hold off. I think that message will change, certainly as these 3, you know, lending programs that I talked about will be rolled out.
All right, guys. Well, that brings us to the end of our session. I'd like to thank you both, Jamie, Dante. I think you've given some excellent information. The webinar will be, has been recorded, will be available to our membership and to our audience. Who knows, maybe we'll have you back on again, and after we figure out this glitch, I do apologize for that. But on behalf of myself, on behalf of the Women in Dentistry community, on all dentists, because this webinar, of course, and all of our sessions are open to everyone, we want to thank you for the insight, for the information. We will be sending your contact information as well in follow-up emails. So if people want to get in touch with you both, I'm sure you will welcome that as well. So we do thank you very much for your time, and audience, thank you for logging in. We've got some other excellent programs coming down the pipe next week with Dr. Sally Safa, the following week with Dr. Sonia Chopra, the endodontist, and I'll announce today that we're doing a joint program in conjunction with the Canadian Dental Association. So we're going to be giving, on the day that we were supposed to have our symposium, we're not going to do a full day symposium, but we're going to give a few hours of lectures on relevant topics related to dentists. So again, I thank everyone for your attention. Keep a lookout for these wonderful programs. You can find us on Instagram, of course. The handle is @Women's Dentistry, on Facebook as well. And of course, subscribe online, womensdentistry.com, and we will send you any information. So again, thank you, Jamie. Thank you, Dante.
Thank you.
Thank you for having us.
Yeah, our pleasure.
Bye.
Take care.
Bye.
Bye.